The scenario of a no-deal Brexit has been already priced in by market participants. So this negative scenario knocked the pound sterling to a fresh 28-month low. The euro is making efforts to rebound. Meanwhile, dollar bulls are in the wait-and-see mood. Nevertheless, the US dollar is likely to resume a steady rally amid weakness of its rival currencies. The British pound has incurred the most losses. Newly elected UK Premier Boris Johnson had the first telephone talks on Brexit with the European Union leaders. The outcome was negative. The UK Foreign Ministry stated that apparently the kingdom should get ready to depart from the European Union without a deal. The UK government plans to allocate extra funds to cushion the aftermath. It seems that the new British government does not mind rising Brexit uncertainty. The idea of snap elections is getting imminent. In this context, the number of Eurosceptics in the parliament will increase, notably that will ensure a no-deal Brexit. This scenario puts traders working with a sterling on edge, so the pound is extending weakness. The pound-dollar pair touched and broke the support level of 1.2350. This opened the door to a new low at 1.21. In the middle of the European trade, the pair declined to 1.2326. Then the pound sterling tried to recover. Following the policy meeting last Thursday, Mario Draghi did not say anything important to make long-term buyers revise their portfolios. The market showed an impulsive response to the ECB policy update. This week, buyers and sellers still continue to fight for the level of 1.11, which could determine a further trajectory of the euro-dollar pair for the nearest months. Now the pair is trading at about 1.1124. Meanwhile, the euro is unable to attract market sentiment in its favor. The Swiss franc is gaining ground versus the US dollar. The pair is trading at near 0.9911. The franc faced a challenge last week. As a result, the Swiss currency slumped over 1%. Another safe haven asset, gold, is slowly regaining losses. The likelihood of a deep debt cut by the Federal Reserve is waning. At the same time, the market of precious metals finds support from the prospect of monetary easing in the United States. To sum it up, the medium and long-term outlook for gold remains bullish. However, analysts expect the yellow metal to trade sideways in the short term. You were watching Market News on InstaForex TV channel with me, Kate Stichina. We wish you profitable deals.